a lot of those challenges.
What's going on with the interest rates right now? Is it still pretty low?
Yeah.
Like,
Yeah, coming back to rates are still historically low. The true rates right now probably in the high twos, with no points or close to no points paying to buy the rate down. Some lenders will step in and buy the market, right? So sometimes you can actually get a truly lower rate, but on average, high twos, low threes. Now, I will make one very important comment, and that is rates are heavily driven right now by the borrower's specific qualification. And 'cause I get this every day, all day long, what are rates, right? And it's impossible for me to say to one person, hey Jim, your rate would be X, because I don't know Jim's parameters, right? His rate might be much better than someone else who has almost identical qualifications, but their credit score is lower, right? And so rates are heavily dependent on credit scores right now, loan to value, right? So if you've got a perfect scenario, you're in the high twos, low threes, but if you're not perfect, it can get higher, pretty quickly.
How long does it take usually to close a loan today? Let's say that I wanted to refinance my house because I have a 3.125.
Yeah.
And I'd like to get down into those twos,
Yeah.
and I've got huge equity in my home.
Right.
So.
Yeah. So typically.
And I know my credit score is
really high. Yes.
Have you ever heard of an 850?
Yes.
Wow.
I think that's the
I got one. Matter of fact, I had it taken, framed it.
Good for you.
Yeah.
That's
Been around a long time.
That's a great question, and it actually goes back to Jim's question about the types of financing. So with mortgage banking, because we control the process generally from start to finish, we're able to close in call it 25 to 30 days, right, with a refinance. You can close much faster if you really if there's a reason and you push everything and rush every process, every queue. But traditionally 25 to 30 days. Brokers and the bigger banks tend to be a little bit slower just because of the volume. It's harder to, with brokers, you can't really control the process, so it might be a little bit slower as a result of someone else's need to perform a certain action. And then the big banks, again, there's so much volume, but 30 days.
So let's say that today's interest rate, you said, is like 2.78, just hypothetically, that that's what today's is. Well, let's just round it down a little, we'll go to 2.75, okay, I like that better. And so, do you lock in that rate? Because I've heard people saying they lock in an interest rate and it might not close for 30 days for whatever, maybe 40 days, so.
And for how long can you lock a rate for?
Yeah.
Right?
Yeah. So that's
for a month or.
So every lender will have different allowances, if you will, rules that need to be followed. And so sometimes if you get to 30 days and the lock is about to expire, for example, the borrower has to pay for the lock extension, right? They'll force that.
Oh.
But as a mortgage banker, right, we control the cost of doing business. And so my personal belief is I never pass that along to anybody. So if it got to 30 or 31 days, I would absorb that cost, like the extension cost. But the ultimate answer to the question is traditionally with conventional financing, you can lock for 15, 30, 45, 60, 75 days. So generally it's in increments of 15 days. And the longer period you lock for, the higher the rate. So it's a higher rate to
question,
hold funds.
What's going on with the appraisals nowadays?
Oh,
Can you
that's
explain what's happening?
Yeah.
So is there a catch where you can get an expedited appraiser and maybe pay some more to get the job done quicker, so we can close faster?
So typically, and this is a discussion that's gonna probably be seen by a lot of people. So in general, the demand for appraisers is really high right now. And in conjunction with that, you have appraisers who have left the business, right, in the last 5 to 10 years because it got so strict. And so you've got, fewer appraisers. It's harder to get an appraisal license. and then really high volume. And so that leads to, more need than there are people to serve the need. Unfortunately, it's also left, it's a kind of supply and demand thing, the cost of that service has escalated considerably. And, unfortunately, money talks, and so I think if you're willing to pay more money for an appraisal and you let the loan officer know that we're willing to pay more, then they can put it out there with a higher cost, you'll probably get it done faster.
What's like the average fee for an appraiser?
So it depends on the value of the home. So if it's below $1 million, it'll be in the 600, 700, 800 range typically.
And who pays for that?
The borrower, yep,
So the borrower
typically,
pays for it.
yep,
So is that in all their closing costs then?
yes, yep. If the value is more than $1 million, it'll be an extra 200, 250. I will say, we had this discussion before we started our session here. Right now, appraisals are kind of like the wild, wild west. And you'd like to think that a $750,000 home would appraise for exactly X dollars, but because the demand is so high, that value could be $1,000. It could be $1,500, right? And unfortunately, our industry, there's not really a policing of that right now. And I'm hoping that as things kind of slow down and get back to normal in terms of volume, that will get back to, the cost of an appraisal will get back to where it should be.